So with that said, thank you, Kavita, Kaushik, Anand, Raju. It's very nice of It's I'm glad that you're taking the obliging to the request. Thank you very much. Okay, we are already done 2 minutes, and I don't want to put in any more time for. This is one of the times where I'm surprised with the turnout. We generally have more turnout during our clarification call. Either our first call or the introduction call was very clear about what on the topics that we covered, or possibly it's just the holiday week and people are looking at traveling or whatever it is. So with that said, I will not without any further ado, let's begin with the call right away. And while I have certain topics already to be covered, it would help if you all have any questions that you would like to shoot out to me before we begin, so that I can set a context to it, and then we can take things forward likewise. So any of you questions at this point? Okay. Did all of us on this call today, have all of us been through the introduction call? Okay, I see Kaushik nodding, Kavita nodding. Thank you very much.
Yes.
Okay, beautiful. So if we have no questions, I'm just trying to see again. I'm not. How do I put this? I am not judging you all. I'm just wanting to understand the context here, right? So if there are no questions from the introduction call, what is it that we're looking at on the clarification call? Because from my understanding, the clarification call is predominantly going to be talking about how much money, how we're going to be deploying, so on and so forth. So can I have some pointers or feelers, please?
I think I had the same question. Go ahead.
Sorry, Kavita, go ahead.
No, go ahead.
So I was just thinking about in the call you were mentioning, saying in the clarification call you are going to mention about how to construct this portfolio.
Okay.
That's one thing.
Mhm.
And the second part, I had a question saying that we will have to link this to the demat account, right? And when we are buying it out, and the shares will be delivered to the demat account. And if we are selling it across, then how it gets repatriated to back from the demat account. That's one, probably it's a technical and the basic question.
No worry, I will have that addressed. Not a problem at all. Sorry, Kavita, thank you for allowing Anand to go first. And your question is?
No worries. My question is much more basic. I think this was covered in the call also. We got some example of some of the IPOs that really worked, right? And the criteria based on which it was selected. So what is our overall approach on how we are getting into this selection? Are we going with kind of a diversified approach, or are we going to stick with like what we are doing with Asti.com, right?
Yep.
One by one, and instead of that, are we going in bulk in 10 different things or 5 different things, or are we going one by one based on what is available for us?
Very nice. Good question. I know this was covered, but obviously how it was addressed on the introduction call when compared to what we're going to be doing today is slightly different. So I will address that a little later in the call, but glad that you brought that out. Any other questions? Nirupama, Bonnie, Atul, if you come on videos, yeah, it's okay. I mean, we will.
Sharad, one basic question, and
Yes.
What is the history or the pedigree of this company, of this organization? They kept saying 15 years, 25 years, but I was not sure if they have existed for that longer period.
Okay. All right, cool. So Abhishek, I think do set your. I hope you've got the video piece on, but feel free to chip in, because before I begin, I'd like to address Kaushik's question, because we on our introduction call have covered that particular point, but what I'd like us to do is give a little brief to your how you got started, and a little bit of your corporate background, so that will give us a better understanding, and then I'll begin with the correct format that we have for today's call.
Great. So good morning, everyone. Thank you for having me on the call. So just to address, our how we got started, and what has been the pedigree of the firm. So essentially, as in the wealth management space itself, we've been there for about 20 years now. And we started off with an entity called Sapphire Wealth Management Services Private Limited, which is essentially a direct broker with all major exchanges. So it's a NSE, BSE based broker, which is active into commodities, currencies, forex, stocks, all of it. And how we got into pre-IPO is a very interesting story. So one of our clients had early access to OMDC, which is Orissa Mineral Development Corporation shares. It's a mining company which owns a lot of mining assets in Odisha majorly. And that was a large block. I think this is close to, 15 years back. And at that time, this block was close to around 10 crores worth. So what we had realized is that obviously, again, when we were evaluating our own metrics and trying to judge what the company is, we realized that there was a significant amount of value appreciation which was due with that company. And that was the first company where we invested in the pre-IPO space. And Odisha Mineral went from, I think, close to 2,000-2,500 rupees levels, which was our initial entry point. And it went up to close to 90,000 per share levels. So that is how we got, our first access into the pre-IPO space around 15, 17 years back. And post that, what we realized is that this is one space wherein there is a lot of demand, but there is very unorganized supply. So people want to invest before the IPOs. They understand why there is a need to invest before, or there's a need to why get in on the ground floor. But because there is no organized format in which it can be made available to an investor, we started actively then searching for opportunities where we can bring these investment ideas to investors, and we can make the execution fairly simple for the oncoming investor. And then we started working in IPOs like ICICI Prudential, ICICI Lombard, Lux Industries. So Lux Industry was again one of our very large bets, which I think Lux had IPO'd in 2016. We were invested in Lux from 2012 or 2013. ICICI Lombard was in a similar region. Bombay Stock Exchange was also in a similar period. More recently, then we went into Nazara, Barbecue Nation, Paytm, and now we are available with the options which are currently listed on the platform. So just to summarize your question, Kaushik, the idea is that we've been into the space for a while now. And we started very early on with companies which, if you even check their calendars, they would have IPO'd close to 2013, 14, 15. And since then, we've been, growing the business. Back then, we may have had like a overall investing community between 200 to 300 folks. Right now, we service over 8,000 individual investors who are situated in more than 15 countries worldwide.
Thank you.
Did that help, Kaushik?
Yeah, that helps.
Awesome.
Thank you.
Thank you very much, Abhishek. So everybody, I'm going to be now officially beginning the format in terms of how we generally have the clarification call. And this time I realized that while I'm a visual person, I've been giving most of these facts in just auditory form. So I just thought I would share with you all what's the method of madness that I follow or before we go about partnering with an organization, and how I go about planning to see, okay, how much money is it that we need from every experience that is unfolded for us so far, right? So I'm going to begin sharing my screen. Please give me a thumbs up when you all are able to see my screen as well. Okay. So we're here. Are you all able to see my screen? This is a template of sorts that we used to use during our coaching programs. And I used to tell people in terms of how you go about validating products. Okay. Now, 6 of the parameters that are important to me while I go about investing in an instrument. And as you can see, returns is the least. It's not even a parameter that is concerned, right? What is first important is, because I've noticed while we have audience available, mostly people that come to me are in the age group of 40 to 45. I have audience that, because of the success stories that we've had, we had audience as young as 27 as well, and people as old as 50, 55 getting in as well. Okay, here, ladies and gentlemen, this is everything that we currently have, right? First of all, is this instrument regulated or not? Now, if you got to go about working this with ASTI, or got to go about segmenting these parameters for Altius, here it is. We currently have returns going anywhere between 0 to 1,000%. Okay. In fact, you could also have a few minuses, because Abhishek covered this very clearly on day one or during our introduction call. There have been some companies, depending on when you got in, has been a 30-40%. For example, CSK itself, which is one of the highlights of in the space that most people are looking at getting into this, if you had probably taken this about a year and a half back, you're down by 30%. And there are people who
it could be negative as well, right? Sure.
That's exactly what I'm saying, Kavita. Zero, minus also.
Minus also. Yeah.
And again, I'm saying minus not because of the fact that it will go minus. It depends on when we got it. For example, like I was just saying, CSK, if you would have bought Chennai Super Kings, that is, if you would have come anytime in the last 1 year and you're looking at it now, you're down anywhere between 20 to 40% minus. And at the same time, if you would have come 2 or 3 years back, you're today standing at about 2x returns. Okay. And I'm saying this for a very categorical reason, which I will bind towards the end of our call today. So very clearly, this is a alternate instrument. In other words, it's the satellite portfolio. Okay. I'll tell you all why satellite portfolio, because most of us still are not aware of this thoroughly. So we'll touch upon that in just a bit. But these are the two parameters, right? We've understood that this is a satellite portfolio, not necessarily the core portfolio or an alternate investment. Then is it regulated? Now, unfortunately, this space is not regulated. Okay. However, is Altius's business, what they're doing, is that under lenses? Is that under audit? Absolutely yes, because they're a private limited company at the end of the day. Okay. Next, safety of your capital. Now, this is a very dicey. 1 second, Kapita. Let me finish this through, and then we'll get through that. Yeah. So, challenge with this is your safety of the capital actually depends on the market, and how successful this is depends on how long we're going to be staying in the market. I've put it low because I like to be conservative, but the actual answer here is it depends. For example, let's talk about investing in any grade A stock, Infosys for that matter, right? If you would invested in Infosys 2 years back, today you would have seen a good deal of volatility with a minus 40 to possibly a minus 20% right now. So at that point of time, if I'm only looking at Infosys with the blinders on, then it becomes volatile. But over a period of time, what I have observed is that it is always a winner. If I keep a 5 year, 7 year recurring timeline in mind, then comes charges. Now, charges is basically any kind of charge that you would end up paying. In this case, the only kind of charge that you have is a transaction charge, which is built into the price. So that's why it's got low. Now, liquidity, I've put this. This should not be in right here, right? So I've put moderate. Now, why have I put moderate? Even though the fact that they've got a good mix of audience on their platform, is because depending on how much heat a particular stock has garnered, there could be a possibility that's not going to be available. So at the time that I need my money, it may not be available for me to liquidate, even though there are buyers and sellers on the platform. Okay. Now, I'm playing devil's advocate here, and I'm doing this as a very risk-averse investor, right? So Abhishek is on this call, even though he's a product manufacturer, and he'll probably differ with me from some of the points I'm speaking. But like I said, I like to look at every platform that I'm bringing to my audience from a very, very conservative standpoint. So as in, what's the worst thing that can happen? Okay, so please, that's the backdrop to these pointers that I'm referring to. Then comes taxes. Now, why have I put low taxes, even though there is a capital gains at the rate of 20% for stocks held below for the stocks held for below 2 years period, is because it is still better than other instruments that's available. So currently, give me a second, okay? I like to have Shobita marked as a co-host. I'll tell you all why we're looking a little fluttered today, a little later. And yes, Shobita, you can go about please making sure everybody gets access to join in the call, right? Sorry about that small confusion. Right. So taxes. If you look at other instruments, so you either have capital gains or you have marginal taxation. Under marginal taxation, it's flat out 30%, or you pay this as a TDS and then you got to file that returns then and there. Then come capital gains, which gives you the benefit of paying taxes for long term at the rate of 10% or short term at the rate of 15%. This is right in between. And since we're going to be putting a very small percentage of our portfolio in this, that's why I put the taxes being low. Okay. And peace of mind. Now, for most of us, because of the positions that we are in life and because of the timelines that we are stretched for, I'd like to give very high weightage for peace of mind. Okay. And peace of mind is because, while some of you, we've been working together for 10 years, 9 years, some of us have just been working together for just 3 years, 2 years. right? And I've seen how people's priorities change depending on different age groups, right? Now, when most of us are in this 40s, mid 40s, senior management, mid management level, we do not have the time to go about, I mean, we are okay taking 5%, 10% lesser in returns, but we don't want the headache of having to go through logistical nightmares. So when I say peace of mind here, I'm talking about all the different parameters, which is how much money do you need to put in, how easy it is to get in, how much of time is involved when you're getting in, getting out, all of those different things, right? And that's why I've given a very high rating on peace of mind. All right. Now, with this classification, I need to know, do you all have any questions over here? Kavita, I remember you raising your hand, so I'd like to take your question first.
Yes, my question is, Sharath, on the regulation, right? You said that the area itself is not regulated, but the company is regulated. Can you explain this in a layman's term? Because
very nice.
What I want to understand is what happens if the company goes bankrupt or anything like that.
Okay. I'm surprised and glad that you're asking this question, because if you're asking, I'm sure quite a few other folks also have this question in terms of what happens if they go bankrupt. So here's the thing, to answer the first question in terms of regulated, Sharath's company right now, when we were Ferdinand Wealth Management Private Limited, okay, whom I was what was the law that was regulating me? The Companies Act. Okay. I was not regulated by SEBI, which is the regulator for securities. I was not regulated by IRDA, which is the regulator for insurances. I was not regulated by any other governing body for these instruments. Like one of the instruments that we have our highest amount of paper-based assets is mutual fund. Who is it regulated by? SEBI. It gives investor that protection that, okay, you know what? There are certain guidelines that product manufacturers cannot go about crossing. They have to follow these kind of deadlines or guidelines that have been put forward. You can't do hanky-panky work out there, right? Then comes, so if you're looking, so that is from a regulation standpoint. Now, when you say a private limited company, the kind of the kind of accounting nightmares that a company has to go through when you're a private limited is unprecedented, number one. Number two, in Altius case, they are like we learned in our first call, they have raised the seed round, which means there's external investors that have put in money. Not that it's a big bearing, but there is a reason for that, right? They're not looking at doing work in such a manner that is going to cause it's going to tarnish their reputation that they've been trying to do. Because with whatever work has happened, if you're dealing about 8,000 transactions in a year, a small gray area can affect your your next round of funding by a large deal. Okay, so from investment body standpoint, the asset class is not regulated. It's not just Altius. None of the pre-listed space investments are regulated. Like for example, if you're asking ASTI, right? ASTI in this space is not regulated by any governing body. On the contrary, if you look at liquid loans, right? What does it do? It's in the peer-to-peer lending space. It's regulated by RBI. So there's a regulated body that takes care of these guidelines and how these guys got to operate. Was I able to answer that question for you, Kavita?
Yeah, so just one question on top of that. So let's say we invested in 5 to 10 different companies via Altis, and tomorrow Altis shuts down and they go away. Can we directly go and approach these other 10 companies of whom we have invested and follow up with whatever we would, as if we would have invested with them directly, which means the whole responsibility lies with us.
But I'll answer that, Kavita, because there are a couple of points there.
But there is just one point there. But we are investing via a platform that these guys are providing us, right? Now, will that platform also go away once Altis shuts down their company? So what is the impact of when I mean Altis shuts down a company? And Abhishek, sorry, I'm just looking at the worst case scenario and nothing.
No, Kavita, there's no need to be
clarify everything. It's better that way.
And see, Kavita, the reason why we have generally the senior ups on these kind of calls is so that we know that these things are coming straight from the horse's mouth. Now, needless to mention, I've asked these questions, and Abhishek, when I'm answering, if I miss out any point or there is an additional pointer that you'd like to add in, please feel free to chip in. Yeah. So, Kavita, here's the thing. If you remember during our review calls that we had, I mentioned very categorically that let's start withdrawing money from Finzi's investment. Do you recollect that? Now, not that there is something wrong with Finzi, right? But what was wrong, or what was the risk that was not covered, is the fact that tomorrow if Finzi closes down, I will not be able to get my money back, even though because the platform doesn't exist. The platform is helping me recover the money from the people who they've lent it to, right? As the liquid loans, Altius has only a platform play over here, because the asset is in your name. You're not buying it in Altius name or Asti's name or whoever else for that matter. Now, for example, let's taking a cue from where Abhishek left us with during the last call. He mentioned about Zerodha. Now, Zerodha was, when they came into the country, they were a zero discount brokerage or low discount brokerage firm, right? Discounted brokerage firm. When they came in, it was a very new thing and nobody even trusted them. Today, they are country's largest demat broker, beating ICICI and HDFC Securities. Okay. Now, let's go a little back. What happened if Zerodha folded? Let's understand, all these stocks are in my name, in my demat account, right? Altius is a platform that enables this transaction. So the minute this transaction is done, these shares come and sit in my demat account. Okay. Altius, tomorrow, if they fold after you've bought, now what ends up happening is you are free to take these shares, and the only challenge we will face is we'll have to find a marketplace that is willing to buy these shares from us. So what's the worst case scenario? The worst case scenario, this company that we have invested in, let's say ABC, doesn't go public, right? Then you stay put with that investment. Now, let's say there is a demand like a CSK, like a Studs, or let's say a Farm Easy for that matter, right? And you do a quick Google, people, buyers or sellers of this particular company's name. They'll probably reach out to you, and there's that hassle that we are talking about. So that's the risk we're talking. That's the inconvenience that we're talking about. Having said that, Altius is not the only player in the game. There are quite a few players already there, but they are not in the online format like what Altius is there. So you'll probably have to reach out to the management, drop in a line to the customer care, or let's say the management reach out to them on LinkedIn or whatever it is. So these are things that we will have as a recourse. Now, the best case scenario in case Altius closes is that this company is gone, they have gone listed. Right? The company ABC is listed, which means now the shares is easily transactable on the exchange. So after the 180-day holding period, once the stock is listed, I can go about selling it whenever I want. It's as liquid as it can get. So to answer your question now, there is no risk of Altius falling, or let me rephrase what I just said. There is no loss to your money being invested because of Altius folding. The risk that we face is the convenience hassle of having to exit our portfolio in the convenience that we were looking at buying and selling. Abhishek, do you want to add anything to what I missed out or what I just said over there?
No, absolutely. I think you've covered almost all of it. So I think the bottom line is that this is not an investment into a fund or into an LLP or into any other instrument where you don't have control. This asset will show up in your demat statement like you would get to see shares of ITC or shares of Tata Steel or shares of Reliance Industries. So it's in the exact same manner. So your risk is probably only for the 3 hours between which you've made the payment and you receive the shares. That's it. Once the shares are in your demat account, you are absolutely independent in terms of any risks. After that, the only risk is the investment risk, whether your investment is supposed to go up or down. But there's no risk. There's no, you're practically indifferent to whoever you've bought it from, is what I'm trying to pitch.
So in other words, Kavita, just to draw a parallel here that can, make it easy for us. They are a Zerodha for a pre-listed space.
Got it. And I can sell them to anyone else who wants to buy it, right? Even before it is IPO is
so Kavita, you are allowed to sell. There should be people who are willing to buy.
Exactly. Yeah.
So there are sellers there are buyers and there are sellers at any point in time. Like I said, CSK has been on the platform for upwards of 3 years now. Am I right in saying that, Abhishek?
2018. So 4.5 years.
So right from the start till the end, there have been buyers and sellers. Okay, so that is one thing. Bala, I'm going to get to you in just a bit. Shobita, in the meanwhile, while we're addressing these questions, could you please pick up the statement of how it's showing if the stock that we picked up, the pre-listed stocks that we picked up is showing up on in my demat or not? So if you could please pull that up and tell me when that's ready. All right, Bala, please.
Sharad, hi, this is Amit here.
Amit,
I've
one
also
second.
got a question.
I will take your
Just
question.
let me know. Yeah, let me know whenever you're ready.
Sure, no problem. Thank you. Yes, Bala.
Yeah, Sharath, just to deepen the knowledge of this peace of mind. So generally, if your product is more regulated, then I assume peace of mind is better. But now you give high, it's not regulated rating, but peace of mind is high. So can you please a little bit throw more light on
peace of mind and regulations are two different things, Bala. See, all of us at the end of the day, if you remember, we've associated our engagement for a very short time. It's just been less than 9 years. Sorry, less than 9 months for that matter.
Yeah.
Right?
Yeah.
In the long, I don't know if you've heard me saying this. I'm of the opinion mutual funds are tomorrow's FDs. I'm going to say that time and over again because it's getting productized. More and more regulation that comes in from the regulator, there is lesser and lesser space for people like us to make money. Your money is protected, just like FDs. But that doesn't mean you will have a outperformance as such. And that's why when you do your reading externally, why people in the Western world go about saying invest in an ETF, don't invest in an active managed fund. Why? Because an active fund manager cannot go about going out of his way from regulations that he's regulated by. And let's face it, even the Western world, regulations are very, very strict. So I'm not asking you to put all your money in this space, right? We are going to talk about asset allocation in just a bit. I've given peace of mind from a standpoint in how easy it is to get in, get out, how much of a capital do I need to invest, and so on and so forth. Right? If you visited the platform, it tells us how it's so easy for me to go about getting the information about these companies. I'm not investing in some sort of an idea. It's the company is already existing, making or not making money. The founders, promoters, everything exists. So it's more or less like how you've gone about investing in the FDs, in that company's FD that you're speaking, even though the only regulation that it comes under is the NBFC Act. It's not regulated by a regulator. You follow what I'm saying? But your priority was the returns and the fact that a reputation that has been doing so well for so many ever years, whatever the story is, right? I have given peace of mind a higher rating from those parameters. I have not given it on the regulation. Having said that, am I willing to take a risk on this? I am. With the limited amount of money, I am not going to stretch that limit, that allocation that I've got. Did that answer the question for you, Bala?
Yeah. Thank you.
Thank you. All right. Amit, why don't you go ahead with your question?
Sorry, I had missed out the the previous call on the IPO.
Sure.
I've only got one question, Sharad. The question is that I just want to understand the selection criteria of this company, of these companies, pre-listed IPOs, and I want to know that is there any when Altius or whoever Abhishek, when they select the companies for pre-listed IPOs, what is their criteria when they choose these companies? Is company has a minimum 11 years of financial data with them? Is that one of the standard forms before choosing these companies? I just want to know that.
So Amit, since we've already addressed this in detail twice in the introduction call, I'm not going to take that right now. However, if you do have time towards the end, you know what? I will address it towards the end, irrespective of whether people are there or not there. So I will have to take it to end in respect of everybody's time. I hope that's okay.
Okay, no problem.
Awesome.
No problem.
All right. So very quickly, ladies and gentlemen, why pre-listed IPOs? I'm not going to look for answers. I'm going to be blazing through because we are already 30 minutes down this call, and we have only another 30 minutes left. So real quickly, why we need to have an investment in pre-IPO space? There is significant amount of returns that you can make in a relatively lesser time. No doubt that you can go about making money in private equity. No doubt you can go about making money in certain listed stocks as well. We know stories of companies, listed companies that have given you a 10x in, let's say, a 5-year or a 6-year period of time. But in the pre-listed space, you can make the similar or probably higher returns in much lesser timeline. Okay. So this is the reason why you need to have, or why you should probably explore pre-listed the pre-listed IPO space. Okay. Like I mentioned the other day, in our introduction call, while you also have the similar kind of possibilities available in the private equity space, right? Why does the pre-listed space make more sense? because these are companies that are actually more often than not making money. They are making revenue and possibly also profitable. There is a lineage, there's a product, there's a service that these guys are already doing. However, in the private equity space, you're as an investor, you're not even sure whether the company is going to take off. You're not even you can come at different levels, at an angel round, friends and family round, seed round, and then series A, series B, whatever, right? So that is a different beast altogether, and the minimum ticket size that you're talking about is very different. So that's why, from a risk mitigation standpoint, pre-listed IPO space makes it much better. So if that's the case, why is there not so much of noise about this just as yet? Because until now, bulk of this has been happening. We are very close knit of circle, and it's not being available something that is online. I'm not, I had to say this. My mom has had a issue with a hip, right? I didn't know this, but there are folks that are coming home and getting an X-ray done. So the doctor that we generally go to is not in town. They're coming back only on Tuesday. But my mom couldn't tolerate the pain, and we were like, okay, at least let's know what has happened. So imagine from something 5 years or 10 years back where we were not picturing that things of this sort can come home. I mean, you can have a from home service, an X-ray, right? A complete X-ray was done for my mom at her doorstep without she having to step up. Why did I bring this? I'm bringing this because today we are in this age of being hyper focused on convenience. If it's not available, if I have to take that extra 1 bit, not interested, right? The same logic that I gave to you all again with loan against securities as well. So the reason why I think why Altius, why I believe why Altius is because of that one factor of ease of buying and selling without having to be dependent on anybody else. If you look at some of the other players, you will have to give a request to me saying that, Sharath, I'd like to buy CSK at this particular price. I have to go out to the market, give a phone call and see how many other people are interested, then place an order with them, make sure all these paperwork is filled, and then pass it on. This is the kind of nightmare that we'll have to go through. But with Altius, you don't even need to be dependent on Sharath. You can do this at your end. Not that we will not help you, right? There is the support team, irrespective of Sagar is there, not there, that's a different story. But we can get this thing done. And from a scalability standpoint, it just makes that much more operational ease. Is this all making sense? Yeah, awesome. Now that we've addressed that point, I need to go about keeping a few things in mind, right? Number one, please remember, irrespective of the returns, there is no guarantee. Like you invest in stocks. You would have invested in Infosys, you would have invested in Yes Bank. If it has to crash, if it's correct, it will correct. And therefore, we are not going to go about, putting all our money on a particular stock or a couple of stocks for that matter. I will talk about that strategy in just a bit, but here's how there is no guarantees. Okay. Irrespective of the fact there is a lot of method to the madness in terms of how these stocks are picked up. We are going to make sure, irrespective of all the due diligence that goes in for reasons within and outside our control or the company's management's control, a company can go bust. Is that okay? Taushik, can I take your example right now? I'm talking about your company, Intel. Would that be okay? How many of you think Intel is a very good company? Guys, please share your videos. Yeah, it's really discouraging to look at blank screens. How can we have an interaction? And for those of you who are sharing, thank you very much. I think I will make it compulsory from next time. I'm going to take people off. So I've given you a heads up, right? So if you think that Intel is a great company, I need you all to know Intel's share price has gone below pre-COVID levels. Kaushik, am I right in saying that? And by the way, Intel is a semiconductor company, one of the industries that has had the highest boom over the last 2 years, right? So if a company like Intel with Intel's lineage cannot grow for whatever reason, okay, we have to have that under expectations that pre-listed space, it's a standard operating process. We are part of the market, and market macro and microeconomics will work in their favor or against their favor. Is that all okay? Awesome. Now that we've covered that point as well, next thing that I'm going to be covering, like we just discussed, not all of them are going to be winners. After all the due diligence, we will have a few losses depending on when you're looking at them. Let me take a quick look at all the names here. 80% of you have invested in this fund called Edelweiss IPOs, right? In their NFO times. This was in 2018. Until 2020, that was standing at a 22% CAGR negative. And just after COVID, after I think when the market started recovering, we were standing at a 26% positive CAGR. So losses can seem notional and losses could be definite. So when you're stepping in, please step in with a 5-year tenure. I know in the introduction call, Abhishek mentioned 3 years, but we are not going to do 3 years. We're keeping a 5-year tenure in mind. Again, for reasons beyond and within our control and the company's control for that matter, right? So what kind of money should not be coming into in this investment class? Those of you who want to participate, but you're dipping into your emergency fund, strict no. If you're pulling in money from your emergency fund or any goal that you need over the next 1, 2, or 3 years, you are not putting in that money. It's okay to give it a pass. The company's Altius is not going down. The space is not going to close anytime soon. There's no deadline. There will always be new companies coming in. Like I mentioned in the introduction call, there has to be growth in this space. I mean, I was looking at Times of India. I mean, it's not a newspaper, it's a tabloid, but you look at the one-page ads that are coming from various government, from various states. State of Rajasthan is talking about so much that is going into the MSME and SME space. And I think there was another state. But what I'm just saying is, if we have to become the $5 trillion economy that we are going to become, we need a lot of motivation, a lot of boost having to be given to this space. So there is no rush. Let's set our expectations right. That is one. Two, after all of this, you can choose to get out, but don't get out with a 2-year or a 3-year focus in mind. Instead of deciding, see, one of the reasons this will be an absolute loss making, or it will be a nervous breakdown kind of an investment, is if you start getting emotional about it. Okay. I know some of you are on this call who are comparing your portfolios that I gave you with your friends, colleagues, and all the other punters that come on YouTube, influencers, whoever it is. And now you know what has happened after you've stayed put. Okay, this is not a portfolio for you to check every day. You want to get a little bit of kick, great, open it, close it. Don't take any decisions based on that, because like always, you will hear from me firsthand. You are not going to be investing. At least my suggestion is that you don't invest in anything that I have not invested. You are free to do so. But I'll show you the list of things, and how I'm selecting these stocks is also, there is again some method to the madness. I'm doing a complete reading on this. In fact, I will share these pointers with you all as and when I've got a complete collation of these points. Right? So even though you can exit before 3 years, I'd suggest don't. Now then your question is, Sharath, CSK, I came in 3 years, 4 years back. If I'd have booked out, I would have made 200% return. Now I'm not even making, I'm 20% loss. Now what do we do? Part and parcel of the game. Please do not get emotions involved, right? Stay put for the 5 years. Okay, not all the companies will make it through the IPO process, and I'm not talking about laggards. I'm talking about big brands promoted by even popular names like Aditya Puri, right? Chairman of the board for HDFC Bank and HDFC loans for a long period of time. In fact, most people would give him the credit because of where HDFC is. But backed by him, a company has his pre-listed piece, which is the HDB Finance, has not gone IPO. For more reasons than one. Okay, so 5 years is the timeline that we're getting, and I'm harping on this again and again because some of you will just be, Sharath, forget all the nonsense. Let's tell me where to put. And when the markets go down, then we have a challenge. So I'm being very stern on this, and I'm mentioning them multiple times. Right? That's done. Now, Amit, you did ask this question in terms of what is the criteria that we select, right? What is the criteria that Altius goes about selecting? And therefore, I'm going to be pointing this out. Some of the criteria that I'm going to be selecting for myself because of the options that Altius's platform allows me to, which means it allows me to take a look at companies that have already filed the DRHP, that are almost on the verge of being IPO, that have not filed, which sectors, which segments, who is it backed from, how much of, all the other information that comes in. I'm taking a very mixed approach. So I'm going diversified, not in terms of just sectors, but in terms of different stages of companies.
And also the companies who have not filed for the IPO yet.
100%, right? 100%. Because if I'm only...
But the choice of selecting these companies can also be ours.
100%. Amit, see, like always, for anything and everything that I'm going to be suggesting, recommending to my audience, this is what I prefer. Not that I'll get it right all the time, but I think I've got a record of, reputation of getting most things right, right? And if
Okay,
Warren
so
Buffett
you
can
will,
get,
so you will send us the recommendations.
I'm not just sending the
and then
recommendation, I'll share my portfolio with you in just a bit.
Yeah, I'm just saying that you will send the recommendations with all of us, and it's up to us to decide. And then,
As always.
On the Altius platform, we then go about by investing in these companies, right? That's
As
the whole
always.
process. in
As
short.
always, yes. I'll
Okay,
cover that
so
in a
once
little more detail towards the end. Next steps.
No problem. So is the 11-year financial data
No.
one of the criteria of selecting? No.
No.
Okay.
So,
Fine.
and I'll tell you
Fine.
why that will not make sense, Amit. So, you know what, since we are at the topic, Abhishek in our introduction call mentioned that one of the criteria, the most important criteria is who else is on the cap table of these companies? Who else is promoting? Who
Okay.
else is supporting? So if there is a good cat one or a, you know, marquee investor in this space, that avoids half the trouble, because let's say Rakesh Junjunwala or let's say Sequoia Capital is not going to be putting in 1 or 2 lakhs. They're going to be talking a couple of millions. And if this millions are going in, they do all the amount of due risk. Having said that, it's not that Sequoia has got it wrong, right? This is just one good criteria. So just because Altius is a transaction-based platform, they will not go and take any company and every company on the platform.
Got it.
Abhishek, would you like to add anything other than the other aspects? Because for me, that aspect is the most important. But anything that you'd like to add on what I just said?
I think majorly that's the thought. See, as retail investors specifically, what we need to understand is we want a safety of the investment, and we want someone who's looking out for our interests. And how we essentially cover that is we want to have someone on the cap table who's already done a lot of due diligence, has a board seat, and ensures that things are moving in the right manner, right? Do you want me to cover the other pointers for Amit, or do you want to do that later?
No, we'll do that later. In interest
that's
of
fine.
everybody.
That's fine. That's fine. So
right.
Obviously, Sharad, you just mentioned a few minutes back that the mutual funds are going to be like the FDs of the future.
Right.
So does that mean that whatever we have invested so far in FDs, we can get out from there and then invest here?
So we'll cover asset allocation in just a bit, Amit.
Okay.
Right?
Okay.
Thank
Fine.
you. Okay. I like the way you're putting in straight to the point. With that said, Abhishek mentioned in our previous call that if you build a portfolio of, let's say, 10 to 20 stocks, you're standing at a 25% CAGR at an average. Okay. So now the question is, if 25% CAGR yahan pe mil raha hai, then why even bother mutual funds? Please understand, it's not regulated. It is expected. There is no certainty, right? So there's a saying in English, right? A known devil is better than an unknown angel. We are only going to allocate money to any satellite portfolio only at a certain percentage. Having said that, this 25% CAGR, while it is nice because Abhishek is a product manufacturer, for lack of better words on this call, we are not going to keep an expectation beyond 20%. But that's not the intent. The intent is to make much higher than 20%, which we will. Right? Has there been experience of the past? Yes. But Abhishek mentioned 9x in ICICI Lombard, and BSE there was some other X. He's not talking about the companies that didn't make the X. In fact, there was no X also. Right? So like any other presentation coming in from our product manufacturers, I want you to take it with a pinch of salt. So being conservative, it is always going to be a practice that we are going to be splitting our money between 15 to 20 companies, either in one shot or eventually. Why eventually? We will talk about that in just a bit, okay, in the allocation kind. So I hope I'm clear with the expectations on the return standpoint. 20% CAGR over a 5-year period of time. Can you make money before that? You bet you can, but it's best that we stay put for the long term.
Ganesh here. What is the...
One second, Ganesh, 1 second. Please, use the raise your hand icon over there, so then I don't lose my train of thoughts on what I'm speaking about, right? So where I was getting at before, Ganesh just wanted to ask his question, was Infosys. Was it a small cap at one point in time? It didn't get listed as a large cap or a mega cap that it is today, correct? At some point in time, it was a startup. And at some point in time, it was an MSME or SME kind of segment, right? Now, where were you better off exiting Infosys stock? If you got into the pre-listed space, and let's assume there were market opportunity that was available then, where do you think you should have exited? The answer is never. That is if you just want to go about showing, hey, you know what, I made a 10,000% return. If that's your criteria, you choose not to exit. If your criteria is very defined strategy, you know what? Every time I made a 1x, 2x, 3x, whatever it is, I will exit. But we have to define that criteria because you don't want emotions to be at play. Okay. So with that backdrop, Ganesh, you had a question. Please unmute your line.
I think probably the frequency matched here. So what is the criteria for exiting? Is there a standard say benchmark we are going to fix it and say that whatever be the emotion, let's not emotions come into play and then we are exiting here. Whatever the time frame we are achieving that was the question above.
And I'm glad
anyways you answered it.
I will hammer that down even further. In this particular asset class, I will give you all the choice whether you want to exit along with me or whether you want to continue keeping it. Because remember, supply and demand is not as it is in the listed space, whether with mutual funds or individual stocks. So we'll have to time these exits, keeping a lot of other parameters in mind. Okay, so I will give you all the choice. But when I'm exiting, I will tell you. Okay.
So, another one quick question, probably it's a little later time asking. See, since we are drawing parallel to Zerodha, right? If this platform, the money is going to be directly debited from my bank, or it will be in the wallet of, say, Altius, and then
no.
That was the mode initially they started with, right?
Okay.
Zerodha.
No, so here's the thing. This was covered again in our introduction call, Ganesh, and that's why it is a good idea to at least briefly scan through it so that the questions are not repeated. And in that call, we also showed how you go about placing a transaction. To quickly run through, you will go on the platform, say, yes, I'd like to go about buying the stock. And from there, it will take you to either a UPI, your own wallet, or it will take you to a net banking. And then you have to do the transaction. So you are not transferring any money to the platform. Okay, so that is done. Mayur, go ahead. You've raised your.
So two questions, Sharad. One is, I think there's a certain pool of pre-IPO stocks available, right? And if everybody in this group wants to invest at the same time, how do you kind of allocate that many stocks? And I was like,
even though not an investment banker, but speaking thoroughly like one. But that's your first question. Next one.
And my second question is very related. Like, is the timing going to be when the company lists and then you again sell it off, or you are going to do a 2x, 3x, and you see that there is demand and you sell it off in the pre-IPO space itself? And what's the taxation thought? If you sell it in a pre-IPO, what's the taxation slot that falls into?
Okay. So Mayur, I'm going to give you the same answer like I gave everyone else. Taxation covered on introduction call. I will address it towards the end.
Sure.
First part, and that's why, Mayur, I will not be wanting most of us to go about doing a lump sum of money in one shot because the pool is limited. Correct. I'd like for us to keep a 5 lakh allocation, keeping in mind everyone's portfolio is at a 1 crore. So I will show you the allocation bit towards the end. But assuming that we have a 1 crore, and if only 20% is the maximum that we should keep for a satellite portfolio, right? Now, satellite portfolio, what are the other things that are coming here? Giraffe, Asti, and a couple of other products that we spoke about, the NCDs. These are all satellite portfolios, right? Now, if 20 lakhs is the money that I have, I should not have more than 5 lakhs because I have 4 satellite portfolios just as yet. So instead of exhausting that limit right now, I can keep building on it every once a quarter, put 25,000 in one particular stock and build that portfolio. I'd prefer us to do that for two reasons. One is to handle this demand supply criteria. And second, what's the guarantee that after we put our money, the stock is not going to fall down? Right? Given everything that is happening in the global economy right now, and with the US falling down 3 point, God knows what percentage on the index, right? We do not know how this is going to impact for our markets as well. In fact, we'll talk about that in a bit. But my point being, if it falls, just like you remember when we were having a review call, I spoke about a few global funds of ours taking a beating. It is not because of the fund is bad. It's because the market space has gone down. So what is the best thing to do? Average down your position. Therefore, not a wise idea to go about deploying all 5 lakhs right now. Okay, we could do 25,000 times 20 companies. That is what I'm planning to do. As far as taxation, I will cover it towards the end because it's already covered.
Sounds like a plan.
Awesome.
Thank you.
Go ahead, Nirupama. You had a question.
Hi, it was just related to what you told now about the allocation part of this thing. So I was just trying to figure out what might be the minimum allocation that you'd recommend.
Okay. So then, Nirupama, thank you for bringing this up. Okay. Now, ladies and gentlemen, I think what I'll do is, please jot down your questions, take a pen, paper, make a mental note of this, because if it's going to be something that I'm going to cover, or if I've already discussed, then we are missing out on this 10, 15, 20 seconds, which could probably just take our call extra by another 15, 20 minutes. Okay. So thank you for bringing that up, Nirupama. Amit, I will take questions a little towards the end because I have to cover those pointers. All right.
Okay.
Thank you so much. All right. So we've spoken about the we've spoken about the return expectation. One of the things that we want to do is we don't want to go about investing, keeping in mind that I'm going to get this one stock, which is going to be, out of the park returns that I can brag. I put 10 lakh rupees and today 10 lakh rupees has become 1 crore, right? Let's not get there, because practically we are not going to ever put 10 lakhs in one stock. And even if you get a 10x return on a 25,000 rupees investment, at the max you are going to be making is 2,50,000 rupees, right? Like always, if you all have been with me for a long time, please focus on your percentage returns on your portfolio and not on a individual stock, right? If you only focus on the percentage return of an individual stock, then your global allocation that you've got in these two funds has taken a very, very bad beating, right? At a portfolio level, what should we be doing? At a portfolio level, we should be beating inflation and some more, which means 12 to 15% CAGR returns if you're getting in different asset classes. Bang on. Our intent of getting into the satellite portfolio is not for returns. It's to start getting accustomed to making money how the big boys make money. I don't want us to be complaining like how my mom would complain to me now that, today there is all of these new age products. When we were working, we didn't have these opportunities. No, there was definitely these opportunities. We just didn't choose to study, is what I tell her. So I'm learning from experiences and I'm bringing that to my audience. But we are taking limited exposure. Is all of this making sense? I know for some of you, this is like, Sharath, you're on repeat mode already, but it needs that much of hammering down. Is that okay? I see some smiles. I'm not sure what to make. Is that okay, ladies and gentlemen? All right. So with that said, let's complete. We've already spoken about the advantages of the platform. And so I think I spoke about minimizing your risk, right? Which is where we're going to have a clear-cut strategy. How much money is going to come in? How much money is going to, when are we going to get out of this investment that we've done? And more importantly, invest across different stages. Like Amit was just asking a little while back, Sharath, can we invest in stages where they have not even filed their DHRP? Absolutely you can, because that's where the bulk of the returns are going to be made. You will not make a 4x or a 5x on something that is just planning to get listed IPO more often than not. Now let's imagine if you're talking about a company like Happiest Mind IPO, Happiest Minds. After listing, it has gone 3x. Let's talk about DMart. After listing, it's gone 4x. So imagine, even if you bought it at the time when it's got its DHRP file, you would have done much, much better. Yet there are some companies, if you bought it when the DHRP is filed, then the money has come down lesser, values come down lower. Is this all making sense? So there's no clear-cut strategy, unfortunately, to say, you know what, this is a winning strategy, let me go about doing this, apart from try and test. So we're going to diversify across the board, across all stages, across all sectors. One of the criteria could be, you know what, let's invest in all fintech companies. Not a very smart idea to do, right? We look at some companies that have got success, that have got actual clients, paying clients, that have been able to weather the storm across COVID time, so on and so forth. Is this all making sense, ladies and gentlemen? So with that said, I have finished with what I needed to share with you all from a pointers perspective and in clarification. I'm going to take questions in just a bit. Before that, I am going to be sharing with you all a calculation that I've designed. Okay. So this is your 1 crore. Now, for those of you who have just recently got on board, you don't have 1 crore with you all in terms of your financial investments. And when I say financial investment, property and investments with your employer, which is your NPS, PPF, EPF, all of this is not included. That is not included because that is not liquid. Right? So no property is included in this allocation, and none of your government-based investments are included. PPF, okay, not EPF, okay, which you're going as standard deductions with your employer. That's not going to be included as a part of your allocation. So with that kept in mind, this is a 1 crore. If I'm taking 20%, if I'm taking 20% of this, That allows me 20 lakh rupees. Okay. Be rest assured, there are 3 other products that are coming in, which is going to be in the satellite space. It's not in the regulated space. When I say satellite, which means these are not fraud companies. There's just that the risk element on this is going to be a little higher. You need to have the appetite, or the you need to have a slightly more risk-taking abilities. When I say risk, we are talking about volatility. It is not certain. You cannot, it makes no sense comparing an FD, mutual funds with these kind of instruments for more reasons than one. And we are taking this only because of the fact that the potential of making money for the comparable options that we have is much higher. Okay, that's why we are being part of the satellite portfolio. Eventually, after 5 years, after 10 years of doing this kind of a portfolio allocation, I would want you all to have your satellite portfolio being 60-40, 70-30, lesser and lesser towards the core space. Right? Because that's when we will definitely create the money. For those of you doing a 2.5 lakh SIP book, in a matter of 5 years, you will have saved more money than you saved in your lifetime. And after that, it will so much money in their mutual funds. Now what do we do? So instead of starting after 5 or 7 years, we are taking small jabs at it right now. Okay, 20 lakhs. Now in 20 lakhs, how many instruments do I have? Let's say I divide this by 4 because I have already spoken to you all in terms of what are the 4 that allows us 5 lakh rupees. Now allocate 5 lakhs, keep it aside. For those of you who know why we are starting with liquid loans, you can lock your money with liquid loans over there, saying that, hey, you know what? This money that is there for investing in pre-listed space is going to be here. And as and when I give you all a particular stock that we can look at, we will keep buying 25,000. 25,000 is going to be a sweet number. And why I did 25,000? Again, simple. I can take 20 stocks with this. I either take 20 stocks or I take 10 stocks at 2 different prices. So I'm giving enough money for it to average in case the stock falls down. Now, what happens after the entire 5 lakhs is deployed? Clearly, after 1 year or 1.5 years, it is not going to be the only amount of money that we have, right? Because your base capital would have gone up from 1 crore to, let's say, 1 crore 20 lakhs. Now, if I say after 1 year or 1.5 years, this goes to 1 crore 20 lakhs. Now, how much am I left with? 6 lakhs per instrument. Therefore, giving me some more amount of money that I can go about investing. For those of you who had questions around how we are planning to deploy, what's the strategy of getting in? Is this all very clear so far? Any questions on this, on the allocation? Any questions? Okay, so I'm assuming there's no questions with that. So your next steps on this.
One question, Sharad, one question.
Go ahead, Amit.
So again, in terms of allocation, you have mentioned that we'll be doing some satellite allocations, and then we'll be doing here with Altius. So my question is, how will you compare this with, like, for example, White Oak? We were talking about White Oak a couple of months back. Good. So we don't use White Oak at all, right? Because then this Altius platform is 1,000 times much better than White Oak, right?
Because you're comparing it from a return and not from a security standpoint. You have a very good risk appetite. My reason, I'll give you my example. I've got my money in both. Because I'm not comparing which transportation is the better option. I'm of the opinion I have to go to different journeys, different destinations. And for these different destinations, different transportation is a good alternative for me.
So see, if you look at the strategy.
No, one second. I'll answer your question. I gave you an analogy, now I'll give you an answer, right? White Oak is a PMS, which is a regulated instrument. White Oak comes with a pedigree of someone by the name Prashant Khemkar, who is like the blue chip of blue chips when it comes to the investing world. He has taken Goldman Sachs certain funds to numbers that we can't even count the number of zeros there. And here we have a couple of Goldman Sachs folks who will go about testifying what he's done. However, the minimum ticket size on that is 50 lakhs. Right?
Yeah.
You will not get the kind of returns that you can potentially get with Altius. Right? So from your classification standpoint, this comes under your core portfolio and not in your satellite portfolio. So they cannot be compared. For me, where I'm planning to go.
But this is, see, now when, like, for example, when I'm investing in stocks, there are 3 things that I keep in mind. One is the growth stocks. Okay. Right. So the growth stocks is something that you buy and then you close your eyes for the next 10 years.
Sure.
Then the second are the dividend stocks.
Right.
Dividend stocks is something that, it will take you ages. Like if I was 10 years old, and then if that time I would have started investing, then it's fine. I can retire and then live on my dividends.
Right.
So that is impossible for people like us right now.
Right.
Okay. The third is the portfolios thing that we were doing with you on stocks,
right.
which was like short term buying and selling.
Right.
So what classification would you categorize this in then?
It cannot be classified under any of these three categories because, like I said, this is bought in mind that you will go about building a portfolio slowly and steadily. I'm looking at it eventually replacing a good percentage of your mutual fund portfolio, which is meant for the long time holding.
Okay.
Okay. Because what's the difference? The only difference right now is I don't have a regulation. In fact, some of my audience who attended the introduction call, they went about sharing clippings that now SEBI is looking at making standard guidelines in terms of how their pre-listed space needs to be handled. And like my immediate answer was more regulations, the better.
Right. Okay.
Okay. So this is going to get into a space where more people are going to be coming in. Altius is just much earlier to the party by making sure that it's available online and all the hassles to go about making it scalable.
Right. Okay.
All right. So I've got that. I've got a few questions coming on the chat, but Bala, I see that you've raised your hand. So please go ahead. Go ahead with the question.
Yeah. Sharath, you just now clearly explained how to allocate money in the separate portfolio. In that, you out of 20%, 5% you already mentioned this is for this pre-listed space. Because if not now or otherwise, remaining 75% also I would like to hear from you how you split that 75% in that.
That's the one-on-one call, Bala. And like I said, until now in this year, we've bought out so many products. With Giraffe, we've got bill discounting. With Giraffe, we've got company leasing. We've got corporate debt. We've got structured debt, MLDs. And then with liquid loans, we've got it for a different purpose. So these are all satellite portfolios, right? There will be more coming in, right? So you may choose to do it with 5. I'm not sure. Like when you started, you've been through all these webinars, and not all the products is something that you've been comfortable investing just as yet, right? Eventually, when you build a portfolio, then we can take a look. So I'm answering only to the extent that it can be beneficial for everybody on this call. Anything specific to you that we'll have to make a list of these questions. And as always, the parameter is what? Before you start putting in your money, we get on a call and we discuss. Right? This is just to get the surface level of answers that we're going to be getting from everybody else. So I don't have to repeat the same thing on 20, 30, 40 different calls. So that's the purpose. I hope I've answered that question for you.
Yeah, right. Thank you.
Awesome. Thank you. Any other questions before I start taking them from the chat? Okay. So very quickly, I'm going to share my screen with you guys. This is my portfolio. Like I said, you'll never put in your money, or I never recommend something that I don't have my money in. My first investment that I went about doing is this company called Altius Elevator Company. So now your question is, Sharath, you said CSK, studs, that, this, left, right, center. None, that is not there. You bent your money, put over here first. All right. I'll give you my rationale on another date and time for paucity of time again. But these are all the list of companies that I've taken. Right. Why are you seeing the share transfer pending? You'll have possibly, some of you all already know that Sagar has not been with us, and we've been through hell and back with everything that needs to be covered before this. And this is something that we generally do 2 or 3 weeks prior to this clarification call. But since this was just done a couple of days back, the shares are yet to be transferred, right? So when the orders are executed, it will show up like,
yeah.
Okay. So folks, that is here. I went about looking at my order book, and this is my order book. And that's my holding currently. It's only showing this one right now because of the fact that only this one is available. And watch, after I bought, it is fallen down by 5%. Right? Where Sharath, 5x, 2x, 3x and all, I have not even made 1x.
Sharath, please go back to the order book screen, please. Just for 1 second.
I will share it with you. Don't worry. It's not going to be secret. I get the inherent question. So don't worry. I will share this list with you. Amit, after this call, like I said, the next steps are what? I go about giving you all a pure, there are a lot of my families who don't want to get through a 60-minute, 90-minute GAN session. They'd like to scan through everything on an email. So pros, cons, expectations, no expectations, all is mentioned in that email. It's called
and Sharath, remember that for us, I think of course, the tax implications and our current, because for NRIs, we need to clarify all that with you. Yeah.
Done. So with that, we've covered the next steps. I'm going to quickly run over the questions that we had. So in the chat box, I'm seeing that now that there are rumors of the slowdown lingering in the, is this the right time to invest? Are you investing for a quarter? Are you investing for a month? Are you investing for a year? I don't have whose name is here, but I'm going to be indirectly making a taunt of this message. When you are coming to ask me questions about investing, ladies and gentlemen, please don't ask me, is this the right time? We are not timing the market. We are timing the investment horizon. 10 years, 15 years, 20 years. A baby doesn't learn to walk. 9 months gestation period is there before they come out of the stomach. We are talking about a pre-listed space. So please don't say whether it's the right time. Are they food deliveries? Are you getting food? Zomato, Swiggy, loss-making companies, right? Big Basket, taken by Tata's, loss-making companies. You're getting your groceries coming, even though it is the current time. Slowdown is happening. You're having your jobs. Similar story. And don't look at this as a negative option. Look at this as possibly this could be the best time. For those of you who participated when the Sensex, when the market had fallen down by 25%, isn't your quant investment standing at 28%, 29% in less than four months' time? So strategize, not get a blanket templatized kind of an opinion, right? I'm sorry about change in my tone, but I think this is a standard question that keeps coming and it's very annoying after you being invested with me for that long a period of time. Do you see Altius has a solid growth plan for their growth in their roadmap? Absolutely. I think I will not, I would not want Abhishek to solve. I will talk on his behalf because of all the plans that they have, because of the work that they're doing. I do not know if you all know that they have a 11-member tech team. Is my understanding right? Is my numbers right there, Abhishek?
Yeah, Sharath, absolutely.
11-member tech team, right?
Yeah.
For the platform to be built at 11 members trying to get research with the way how this is going, it's not an easy task. You will not go about busting that much amount of money and having clientele across 13 different countries. So they've got a solid growth plan. And the plan is when they're getting the monies, when they're going to go in for the Series A, or let's say the pre-Series A, you're looking at a big valuation. They are not dependent on the money that is coming from fundraise. They're dependent, I mean, they're self-sufficient because of all the transactions that are happening currently. All right, so I hope that answers the question. After the allocation strategy, please also share what will be our exit strategy after IP. Some of the companies may return 4x after IPO, some of the company, but after some days may fall. And exactly, like I said, this is not going to be something that I have got a ready-made answer to just as yet. I am going to be learning as and when we go ahead. And please understand, 25,000 rupees per company, not that it's small amount of money, but it's not going to be worth so much of a pre-analysis before we step in. It's not a startup that you're investing in. You're investing in established companies, right? So we will have to do a test and today I could say something and tomorrow I would say something else altogether, right? Because the macroeconomics or the microeconomics or factors affecting that industry has affected. For example, let's say we've taken I don't know. Okay, let's say we have taken a finance company, okay, a small finance company. And during the COVID, they are not able to go about meeting people for getting their loans back. Okay. Now, will that be something that I will be worried about? If we listen to what Abhishek said during that day, it is not personal loans that are given. The loans are given only with asset-backed loans, even to that economy. So in that case, I don't have to be worried, irrespective of the situation, at least until any situation that is shown up right now. So many industries had to evolve, and some of them couldn't evolve after COVID happened because something like COVID had not happened in the last 100 years. So unfortunately, I don't have a clear-cut answer, and that's the exact truth. We will keep learning about this from time to time, and you will hear from me proactively whatever measures I'm coming along with. So I hope I've answered that question. Ladies and gentlemen, so I think we've covered pretty much everything that needs to be covered. If I've not touched upon any point from any of the audience that is present here today, now is the time. Please unmute your line and ask me the question. Anything at all, please. All right, I'm taking that as, we've done a good job for today. So thank you very much again. Saturday, you're taking the time out. Alrighty then, folks, thank you very much. Again, enjoy your weekend. You will get a series of emails coming to me. There's that much more question. Abhishek, thank you very much for taking the time on a Saturday. I know you get very limited time with the family, but you've chosen to do this. So thank you again. This is certainly of help. And like I said, we will stay in touch.
Awesome. Thank you, Sharad, for having me. It was pleasure trying to answer all of the questions. Looking forward.
Thank you again.
Yeah.
Thanks. Have a nice
Thanks, Sharath and Abhishek. Thank you.
Thank you.